Well, g'day there, traders and friends, market participants and enthusiasts right around the world. A very important time to be listening along to this very brief market update. Yesterday, I did post up last week's pro analysis class. It's the first time I've actually done this. However, it is very relevant considering the retracement that we have seen take place collectively across the board for the US financial markets. The Dow Jones Industrial Average closed down just shy of 1,100 points over the past week's worth of trade. What we can identify and really say factually at this particular point, now that we have seen this retracement take place, is that the pivot that I was warning about at 26,300 is solid, and that pivot which I'm referencing right now is the back test of the decelerating fan line, which established itself at the beginning of this bull market way back in 2009. Now, the last time we actually touched this or retested it was in the year 2011, so it has been long overdue. And again, it's been acting like a magnet really for the late stages of 2017 into really January, and then of course the first week of February. So what we have in our hands at the moment is that of a tweezer top. We do have almost that of an engulfing candlestick. We didn't see the gap up on Monday, but really what we saw essentially was selling right out of the gate. We did establish that gap in the opposite direction on the Dow Jones Industrial Average. If I can zoom in and go through this with you now, the gap itself is still open. So I'm not actually going to go into the analysis in this public video. Again, I'd like you to sit through last week's pro analysis class because it was something that we were looking out for on the immediate horizon. Now that that has set up, I've just recorded this week's pro, and we've gone through, of course, the bidirectional trade setups, not only on the US market indices. We went through the industrial average, the S&P 500 and the NASDAQ, but also our top 12 individual trade lists. The reason why this is important is because over the past 2 weeks, essentially half of our stocks, or our closely followed stocks on the left-hand side of my screen, Apple all the way down to Tesla, reported. And the week just passed, we have now more or less moved through the entirety, I think excluding that of Baidu. Okay, so we've got pretty much a clean slate moving forward, which is really nice. I mean, we do have a lot of reversals taking place in these individual stocks. We do have a lot of individual trade setups. So in short, it has been that of a rather slow end to January for us in particular. We have been more or less rotating out of trades that we've already been in for a number of weeks, if not months. Now that the market itself is starting to reset, it's starting to adjust, it's starting to rebalance from these overbought levels. The same is true for these individual stocks. We also have a lot which are ready to go. So as we move into February 2018, I think there is going to be a lot of opportunity. We have gone through, I guess, the quietest period so far in 2018 over the last 2 weeks. That has reconciled with the market being as overbought as what it has. Also with, of course, earnings. Now that we have moved through this, or at least we're beginning the reset and we're starting to toss up the idea whether or not this is some form of a larger retracement or that of a consolidation, which is simply going to bounce most likely off the 50 rising exponential moving average. It's giving us legitimate options for how, of course, we can trade this moving forward. And that's what's exciting in the financial market. Some weeks it can be rather slow with minimal sort of opportunity in terms of legitimate swing trade opportunity. Then, of course, we see what's happened over the past 5 days, and then it sets the stage for the next positioning into the continuation of the trade higher, or essentially that of a larger retracement. That is what we went into in the pro class, which I've recorded a few moments ago. So I'd encourage you to have a look at that. Outside of that, everyone, if you have any questions, please email me, success@pivotpoint-trading.com. I will personally respond to you. You can throw me some other potentially stock analysis or things that you're looking out there. But again, the template that I look, or at least look through when I interpret the US financial markets, really are the three major market indices that I give you updates on every now and then, and also our top 12 individual trade list. It has sort of stayed in this form for a number of years now. And sometimes, again, when it begins to be, become a little slow in terms of opportunity, then something like this happens, which is rather overdue, something that we've been waiting for and a little bit championing in a way. But now this weekend in particular, we've got a lot of opportunity moving forward. And that is something that I'm very excited about. and I'm very happy to share with you as well. So enjoy your weekend. I wouldn't be all that concerned about the health, the technical structure of the market itself. This is more so that of a natural correction from extremely overbought levels that has been, again, overdue, long overdue. And a lot of people are going to panic at this particular point. There's not enough information to suggest that this is going to turn into even an intermediate sort of retracement. We could see the bottom of this retracement more or less at 25,200, give or take. But between now and then, when we get there, expect volatility in these markets moving forward, i.e. we still have the open window sitting up here just shy of 26.5. But I think we can all agree that pivot that we were pointing out at 26.3 has held. It is something to take note of, and it shouldn't have come as a surprise or a shock. And I do hope, of course, that you weren't finding yourself jumping into a bunch of open trades towards the end of January, because if you did that and if you fell into the temptation, the short-term temptation, I guess the FOMO of missing out on this rather absurd sort of market activity, which again, along comes with it that of huge profits, you have been burnt, especially on Friday where we saw the capitulation across the board. Dow Jones, just to repeat, down 1,095 points. The S&P 500 down 110. We have got that of not so much a tweezer top. This is what we call a one black crow. So again, a very strong reversal candlestick here. And the same is true for the NASDAQ as well. I expect selling to linger around, volatility to remain elevated until we can shake out, of course, these levels of extreme overboughtness. I think we were, it's not that I think, but we were in fact hitting levels that we hadn't statistically seen since we've been able to chart the US financial markets. So again, I wish you all a very nice weekend. If you have any questions, please don't hesitate to email me. And I'd like to see you again in that pro class if you've been watching these public videos that I've been putting out for a number of years as well. All right. So on that note, everyone, enjoy your weekend. I'll be back with you next week for some more market updates. All the best. It's James signing off on behalf of Pivot Point Trading. Farewell.